Hi friends, let's discuss on Nifty tomorrow. Today the market as discussed yesterday, exactly the same way it is happened. We have discussed right at 24,050. And the market is still have a room to close at 24,050. So exactly the market has been uh, reached there from the yesterday's close, right? So last session close was here, right around 24,000, 23,720 something, and from this the market had a made of gap up at 20 around 24,000 nearby, and then it came down, and then but it doesn't break 23,900. So after 23,900 not breaking, then the market was choppy towards bullish, right, towards bullish. So but however the market closed near to the 24,050. So 24,050. So right now if we check on the day candle, we are clearly that there is a gap, right? This is the gap, right? This is the gap. So this gap has, suppose say this gap has how much points? Around 216 points. So this gap of 216 points say that the market has been again recovered, right? So I don't think this gap may fill, but there is some small doubt that this gap can fill, this 216 points can fill out, based on if the market doesn't hold 23,900. 23,900. So that means in the market can retest again up to 23,831, like 23,800 levels again. So if the market doesn't hold tomorrow 23,900, then we can expect for a 23,900 and bounce back, if possible, or then otherwise it will go down. But however tomorrow there is very important things like, if the market is gap up, right, again 100 or 200 points based on the developments in the news from US and Iran conflicts, then also it will be it can happen two situations. One is run away, gap up and run away, or gap up and sell down, fall little bit go down. So that means if we check on this um, OA levels, if we check on the OA levels, suppose say Nifty tomorrow is also expiry, so it's a tragedy in the markets. So when we check on this, there is a calls out at 24,000, right? These people calls are going out at 24,000, 23,900. Also there is a small build up at 24,050, both calls and puts, but calls is very less compared to the puts, and there is almost calls gone out of 60.73 lakhs, and puts build up is 359. So always we have to look at the seller's point of view. So the sellers is still adding, means that means put is going to go down, put premiums, right? So around 23,100 there is no much calls added, but 24,200 calls are added, right? So this is coming to the change in PCR is 1.2, that is not a 1.5 is a bullish, and 1.2 between 1.1, PCR between 1 and 1.5, 1 and 1.5 is moderate bullish, and anything above 1.5 is bullish. So the PCR suggests that it is a moderate bullish, right? And maximum pain is at 24,000. That means the market can go in this side or this side or this side, right? So market can go up or down compared to the 24,000. So either way it can. So both opportunities for puts and calls. So maximum change in open interest suggests that there is a change in the calls is very huge, impact of minus 60.73 lakhs contracts. And OI, if we see, heavy OI is built at the good tower, right? The tower of OI is here existing here at 24,000 calls and puts. After this If we go through 24,050, 24,100, 24,200, 24,300, so there is less contracts here compared to other this tower and this tower. So there is less contracts here in the call side, and puts are being built up, right? Puts in the red colors. So it suggests that the market may not go down before 24,000. If it goes before 24,000, then we have to look for 23,900. And if doesn't hold 23,900, then we have to see that gap, right? 23,900, 23,800 is today's gap up, so we have to check for that. But however, tomorrow today is the fresh week, first day, and so there is a 23,900 support exists. So we have to check how the support will hold or 24,000 will hold. So accordingly we have to wait for the levels, and then we have to take the trades, because when there is a tight close, right, there is a tight gap, there is a tight things in calls and puts that however the calls is 1.5 and the calls is 1.94, right? So that means 4 lakh contracts are more than calls in the puts. So this is how when about the open interest, so option chain. So but when we see the IVs is also more, so decay in the premium will be more with compared to the choppy side of the market. When it is a choppy of the market is choppy. So when we check on this side levels tomorrow, so it is best if the market gaps up, gap up, and then sell above 24,400 call side, and better to sell puts below 23,800. but however we have to strictly wait for the levels, right? So if the markets gap up and fall to some extent, then if we are in the put side, it will be a problem. And so if the market gaps down and go up, then it's trouble with the call selling. So we have to wait for certain point of time, and then we have to react accordingly. However, tomorrow we have to keep in mind that we are approaching the month end, right? So this is Nifty's last expiry in May. So there will be a huge volatility, right? Or there will be a choppy market to better down the option premium. So we have to be, if the market is very volatile, then you have to wait for the premiums according to the support and resistance levels. For the time being, the support is at 23,900 for today's, and resistance is at 24,000. So if market at any point of time market moves above and open 24,000 more than 24,000, that means a gap up, then we have to wait for a confirmation of the high, whether the high of today's break or not. If the high, suppose say, what I'm saying here is if the market opens at 24,000, say 24,100, and then if the market opens at this stage at, suppose say 24,100 is this area, and if the market moves at 15 minutes, first 15 minutes and the second 15 minutes, if the market doesn't break the high of open or today's high, after open it can go up also and create a one high, and this is open area and high. So if this high or this open area, and then in the next the next 15 minutes is not broken, then it's better to sell the calls. Or if the market breaks the high and it staying there with the confirmation of another 15 minutes, then we'll go for a selling puts, right? From starting from 23,900, 23,850, 23,900, 23,950, like that, like a ladder. We will step up with a ladder like 50 points. So but anyhow at 2:30 we should not to keep anything, right? At 2:30 we have to close the trades, because at 2:30 closing trades is better in the call sides, right? Because in the selling side of options, because we are already in the month end, we have to remember that. So it is very difficult to keep the positions after 2:30 for the retailers, like say 10 lakhs, 20 lakhs, 30 lakhs, 40 lakhs, up to 1 crore account capital. So we'll have a cautious trade tomorrow, and not to jump into the market as in the market opens, and when we have to wait accordingly, have a confirmations whether the today's high will break down or break up, in the next 15 minutes candles. And if the market breaks high, and then we'll go for the call selling. And if the market doesn't break the high and break the high and go up, then we'll go for the selling puts. That is the best setup tomorrow, because market is on bullish view now, because there is no more 23,600 all end, and now we are at market we are at bullish view now. But the 1.2 in the open interest suggests that, between that is calls and puts, open interest suggests that buy and dips. So if the market opens and if it comes to the levels of 24,000 or 24,000 below but doesn't break 23,900, then you have to wait and take the puts. Okay, because the market is already came down, and buy and dip happens, right? So like that. So if the market at any stage, if the market breaking down 24,000, and you have to wait for a considerable dip, and then you have to accordingly take trades in the puts. So tomorrow is a little bit hectic day. So you note down this point what I'm saying. So for the call sellers and the call buyers, or the put sellers and the put buyers, everybody, it will be a little difficult market, because we are in a month end. The expected volatility will be there. There will be a huge fight between the operators and retailers and FIAs, everybody. So accordingly we have to very cautiously trade tomorrow. So today I already made a profit of 30,000, because I have a more conviction, because I was watching market on last Friday, and took a call. I holded a call, so I sold it. But what happens when you see the 24,000 CE, it went a low of around 59 or 55, and now it's 151. That means 100 points premium has been included, right? So it looks like, see, 24,151. This the value of 24,000 CE is, the Nifty should move 24,151. Maybe, who knows, tomorrow it can be opening also 24,151 also, right? So 24,151, and then come down. So that means that much premium is being added. So we always have to be look at the seller side. We always have to be in the perspective of selling side, right? Because today when you see this market, today, the market at 15 minutes or 1 hour, right? So 15 minutes, the market came down to 24,900 levels, but there is, it's not broken this level, right? Two times, 1 and 2, and also another, right? Again third time came, but it is not breaking these levels anyhow. Because why, there is that we can think of two ways here. Like, the sellers are not ready to sell below these levels, right? So that should be the main reason, because the sellers are not ready to sell below these levels. That means the sellers are placing the orders anything above these levels, and then when the buyers are very few here to buy at this above these levels, then there will be a market looks like 15 minutes candles, like this much small candles, right? That is a psychology, right? So it's very clear. If you think on trade side, that means the sellers are not ready to sell below these levels. So maybe, right? And so that's why the buyers maybe say sellers are 100 and buyers are 50 or 25, but they place the orders. Buyers may be placing the orders between these levels or below these levels, and the sellers may be placing the orders below these levels, but there should be trade setup, right? Trade setup or set off by the software by looking into the sellers orders and buyers orders, and it will match to the nearby prices. So that's how this jumping in the tails and upper wicks and lower wicks, and then after that market wait and watch after that, and this breakout, right? This breakout at last 15 minutes, last half an hour or last 1 hour breakout happens, right? So based on the pending orders and many things, so that means the sellers are not ready to sell today at this below these levels, and the buyers is also a little cautious and buying side, and maybe there is buyers also there, but the sellers are not ready to sell below these levels. So that way we have to think on the seller side when in the chart patterns, right? In the chart levels. So that means we have to wait and watch tomorrow how the trades, right, accordingly what we have discussed just now. So please take a cautious view and trade accordingly tomorrow. Don't waste your hard-earned money in options. Options are very dangerous, and we will roll out one session on options about buying and selling options for the indices like Nifty and Sensex. So stay tuned, subscribe to my channel Stocksology in YouTube and Facebook, and so there will be rollover of some good lessons on candlesticks patterns, options, and how to analyze the markets for next day levels. All these things we'll check out in the later period. Thank you.